All right, good morning, everyone. Thank you for joining us today. Welcome to presentation number 2 in our Assurity Life series with Morgan Holbein, joining us from Lincoln, Nebraska. We're going to talk about providing security to small businesses through life insurance. But real quick, if you have any questions, please type those into the chat box on the right-hand side of your screen. We'll make sure every single one gets answered at the end of the presentation. Afterwards, feel free to give us a call for a copy of the presentation or to answer any other questions you might have. But I know you guys are not here to listen to me talk, so I'm going to go ahead and hand it off to Morgan. Thanks again, guys.
Awesome. Thanks, Sean. Again, thanks for joining us this morning. I'm with Assurity, and we're going to be going over life insurance for business owners. So we're going to go over our full life portfolio here at Assurity, and just relate it back to those business owners that you might talk to or you might have in mind, or maybe it'll be a whole new market for you. But that is the topic of today's life insurance webinar. Like Sean said, this is part 2. So we will get started here. If I can get my slides going. Perfect. So Assurity, who are we? I'll run through this real quick. I'm sure most of you know who we are already. But we are a mutual organization. We're based out of Lincoln, Nebraska, so right down the road from Art Jetter. We have an AA- AM Best rating, and we're considered a one-stop shop just because we have such a large portfolio between our life and health products, and then we also have annuities from simplified to full medical underwriting. So within that life and health portfolio, we have different simplified products. We have fully underwritten products. So we have a whole plethora of just products to fit every single need that your client has. Like Sean mentioned, my name is Morgan Holbein, and I am a regional sales coordinator here. Paige Phelps is our regional sales manager, so you might see her name from time to time, but we work as a regional team and work pretty closely with the Art Jetter team as well. So on today's webinar, here's a little bit about what we'll be covering. We're going to be covering the small business opportunity. So we'll kind of go over small business in general, even though a lot of this will apply to just business owners in general, how to prospect those business owners, different strategies there, how to ask the right questions when you're sitting down and talking with those new clients, and trying to figure out which life product is going to work best for them and their business plan. And then offering innovative solutions and just how to fit that Assurity Life portfolio into your business owner's plan. So first, we're going to go over those small businesses. I just want to give you an idea of how big this opportunity is here in the United States. So small businesses, we're going to consider that 5 or less employees. So those small businesses are equaling huge opportunities. So 62% of all businesses are considered small businesses, so well over 50%. So that's quite a big number. And again, small businesses, 5 or less employees, so quite a bit in that business owner market. But here's a good stat as well. 1 in 4 small business owners do not own life insurance. It's just something they haven't thought of, or it's something that they might think they just don't need, or maybe something they think they can't afford. So that's where it's your job to step in and kind of show them the ropes here and all the different opportunities there are for coverage here. So huge opportunity. We have 65% have thought about who will run the business, so that's only a little bit over half. So you might want to run in there and really talk with them about what their business continuation plan is, what would happen if this, or this happened, because it is something, no matter how young or old they are, that they do need to start thinking about. So 65% have thought about it. However, 64% do not have a business continuation plan. So like I said, a huge majority of business owners have not thought about what would happen in the event of a death, in the event of a disability, or just after they retire. So that's what we're going to be offering here with our different life solutions. So over 52%, so over half of those small business owners use independent multi-company brokers just like you. just like our jetter, just like you agents that are on the phone. So prospecting strategies here. So just how to break into that market. It's pretty simple when you think about it, because when you think about business owners, you may think about bigger businesses or franchises or whatnot. But when you think about those small business owners, so the 5 employees or less, that opens up a huge amount of opportunities and may open your mind up to different small businesses that you didn't even realize, those owners that you knew already. So just some tips here about how to seek out those business owners in order to get those opportunities to talk with them about their life insurance. Just be where those business owners are. As you already know, as an insurance agent, networking is huge. So joining networking groups, being at those conventions where all those people are, networking with other advisors. So it may be good to get with an advisor that's been in the small business before, the network before, or works with business owners on a regular basis, and just kind of get some tips and tricks on what they do, how they form their business plans with those business owners. Again, it's all about networking, as you know. And just target a niche. So if you are maybe working with business owners who work with HVAC business owners, pest control, something like that. So something along those lines, maybe boutique owners. So really find a niche there and get really good at that niche and just go for it. I think that'll make it a lot easier if you really narrow that scope down on what kind of business owners you're looking to pursue. So events to consider in the case of those business owners. So this is something they may just think, okay, life insurance, that just covers death. So it's just covers in the case that I would die. But we really want to hammer home that it covers all sorts of things, and it can cover all sorts of things, which is why we want to sit down with them, see what they're really looking for, see how their business works, what their business continuation plan is, and then work around that and make sure that they have all the coverage that they might need. Because some of those events that we want to consider would be a retirement. So it could be just a retirement supplement, which we'll talk about how some of our permanent products can work in that function. It might be a disability. So we'll talk more with our products that have those living benefit riders attached. So it could be a disability that knocks them out. It could be a critical illness that knocks them out of work for a little while. So we want to make sure they're covered on all bases. So putting that life insurance plan into place, but adding on those additional living benefit riders just to make sure they're covered in the event of anything happening. And then death, of course. We want to make sure that their business can continue on. We want to make sure that their family is taken care of, and that they know what to do with the business, what to do with that life insurance money after they do pass away. So why life insurance for business owners? So a couple different reasons here. You can create funds to execute a buy-sell. So many of you are probably familiar with what a buy-sell is and how it works. So it'll create funds in order to get that going and get that into place. Maintains control for the surviving business owner. So if you have 2 business owners working there, a lot of business owners work in partners. So there's a lot of those instances out there. You just want to make sure that that other business owner knows that there's a plan in place in case something would happen to one or the other. It provides liquidity to pay estate taxes. So again, that's taking care of your family and making sure that they aren't left with a whole heap of debt pertaining to your estate, pertaining to your business and whatnot. It can also provide a down payment on a buyout due to retirement. So if they're wanting to buy, again, their partner out, once they retire, it'll give them that cash value will give them a down payment in order to do so and continue on with that business. It creates a better credit risk as well. Sometimes when you're going in to get a business loan, it can act as an asset to the business because of the cash value. So creditors and loan officers, the banks, they'll look at stuff like that and count it as credit there. And then also provide for an owner's family. So again, and this goes with life insurance in general, not just for business owners, but we do want to make sure that their family is taken care of, that they know what to do with the business once they're gone, where the money needs to go to. So you really want to make sure that plan is in place and that all their bases are covered here for coverage. So just some questions to ask when you're selecting a policy. So we'll go over the different life policies that we have available, but we want to make sure that we're asking the right questions first so we can direct them to the correct product. So one good question you can ask, do you think the value of your business will increase in the future? And this kind of goes along with our permanent products because you are building cash value there. So if they think the value of their business is going to increase, you might want to go with a permanent product versus a term. Would it be beneficial to have a policy where the death benefit increases as well? Again, this goes along with that permanent policy because both that cash value and that death benefit are going to increase as time goes on. So we want to see if that's something that they're interested in, if it would be beneficial to them, given what expenses they might incur within their family or within their business as time goes on. Do you want flexibility in your premium payments? This goes along with permanent insurance as well, specifically universal life. This is beneficial if you have fluctuation in your cash flow or you want to be able to just stop paying premiums at some point in the future. So this can come into play with universal life, where you're able to let the cash value kind of pay those premiums for you. So it provides that flexibility if you're unable to make those premiums for a month or so. With the whole life, you're able to take out those cash value loans and pay those back as time goes on. So you're able to pay the premiums that way. So kind of moving into the term, maybe where the term would be more beneficial, would you like something to cover your business loan that's also low cost, living benefits? So cost is going to be a huge thing. These business owners, especially small business owners, don't have a ton of cash, extra cash laying around in order to pay those premiums every month. So they are concerned about cost. They want that coverage because they don't want their other business owner or their family to be left high and dry and have to pay on that business loan themselves. So they want to make sure that that's at least covered. So that's one thing off that family's plate if they were to pass away. And then the living benefits that goes along with the term as well. So we have the DI rider, we have the critical illness rider, we have the accelerated benefits rider that's built in. So offering that extra coverage in case something other than death would happen, but it still puts them out of work and they're not able to perform their business owner duties to the best of their ability. Another one, we touched on this already a little bit, but do you want your policy to only provide funds for the buyout in the event of a death, or do you want it to provide funds in the event of one owner retiring? So those permanent products can provide both. With that cash value, it really, you can do whatever you want with it. You can pull it out when you want, and all of that. And it can be used to fund retirement. It can be used to buy out your partner if they retire, or if the death benefit is more important to them, we can look at funding that more as well. So moving on to what policy they might want to look at. So what policy gives the business owner what they want? You went through asking all of those questions, and now you have a better idea of what they're looking for. So now I'm just going to go through our life portfolio, which includes both our term and our permanent products. And we'll kind of play it out and see which one works in best what situation. So when you are sitting down talking with those business owners, you have a better idea of which one of our products might fit. So we have the term life, which is available. We talked about that last week a little bit with mortgage protection and also the ROP. Participating whole life, we have a universal life. It is a current assumption product, and then joint whole life as well. So we'll go through all four of those. So term, I'll kind of go through this quickly since we did go through it last week, and it's a pretty cut and dry product, pretty simple to use. The issue ages 18 to 75. Face amounts are really flexible here, so you could really make it work into anyone's business plan because we start all the way at $25,000 all the way up to $10 million. So if you're looking to make this term product just cover maybe a smaller business loan, you might look at that $25K. If you're looking to make it a key person type term policy, you can be looking up into the millions. So it can really be flexible with what you're looking to make it be. Obviously, there is no cash value attached to this one. It's strictly death benefit, but there are some great riders, and that accelerated benefit rider is built in as well. So if they would become terminally ill or confined to a nursing home, they're able to accelerate those death benefits. We do have the accelerated benefit or accelerated underwriting built in as well. So up to $500,000 for ages 18 to 50, $350,000 and under for those older ages. So that would mean no paramed exam. So again, they're getting an affordable product that's able to cover their business loans, take care of their family, whatnot, but without the mess or time spent getting that paramed done, and they're getting it for an affordable cost. Those riders that we can add on, we have the critical illness benefit rider. So this one works a lot like our standalone product, and we have a 3-category approach that we take to it. So we have heart attack and stroke category, cancer, and then an other, which covers things like organ transplants, paralysis, severe burns, stuff like that. So this would pay out a lump sum benefit upon diagnosis of one of those covered illnesses. So this would be a separate cash benefit from the death benefit that the term provides. So keep that in mind. Completely separate pool of money, which is really nice. It doesn't take from your death benefit. The endowment benefit rider, the ROP, we talked about this on last week's. But if they are having any hesitancy about pulling the trigger and getting this policy put in place just because of the cost, they are a small business owner, funds are kind of tight, this would be a good way to sell it to them because they're able to receive all the premiums back that they paid in at the end of that term period, or if they let it lapse or cancel it. So think of that as a really good closer to the sale. And then the disability income rider, you can get up to $3,000 a month with this rider. It's a standard 2-year benefit period, 90-day elimination period. Again, up to $3,000 a month if they were to become disabled. So I think that's a really good little add-on just to make sure that they are covered in the event of a disability as well. So it's not just a death policy. So uses for that term, situations where this would be good. And I do have a sales idea here at the end that I'll go over that kind of covers the loan protection part of it. Loan protection is what it's used most often for when we're using it for a business owner. So if they have a business loan that they would like to cover or leave to their family or whatnot so they can cover it or continue the business, they're able to do so with that term. And again, we have very flexible face amounts. So you can really just take a look at how much you have left on that business loan, what the length of time is, and then you can adjust those face amounts and that term period based on how much you have left on that business loan. Business continuation as well. You want to make sure that that business is able to stay open if the business owner does pass away. So just being able to continue that business, being able to pay off that loan, and then another family member could step in, they could sell it off, whatever they need to do. Moving on to those permanent policies, so we have a participating whole life. And I'll go into some of the uses here at the end, but just some of the basics first. Issue ages, we're going all the way from 15 days up to 85 years old. Face amounts start at $15,000 for the younger ages, $10,000 for the older ages, and it is guaranteed renewable to age 121. So with this one, our participating whole life is an excellent cash value builder. I think that's one of the best features of this product. We also do have living benefit riders on this as well. So we have the critical illness rider like we had on the term. We also have that disability income rider like I just talked about. And then the accelerated benefits rider, where we will accelerate up to $250,000 of that death benefit, is also built in on this whole life policy as well. So keep that in mind. It's also used for estate planning. It's great for business owners who are looking to supplement retirement. It can be used in a buy-sell situation. So that's where we see it used most often, usually in those buy-sell or supplementing retirement. Those are the two biggest uses for the participating whole life for business owners. And then the universal life. So ours is a current assumption product. Issue ages, same as the whole life, 15 days all the way up to 85 years. The face amounts start at $25,000 and go up from there for all ages. And then it is guaranteed renewable as well to age 121. So the reason why maybe someone would select this one over the participating whole life, it is a little bit more flexible with those premiums. You can skip a premium, and I mentioned this earlier, but you're able to take that cash value that it's building and pay off those premiums. So you can skip paying those premiums and just use that cash value if you need a little break, which I think is really helpful with business owners. It does build a strong cash value, and it can be used to supplement retirement as well. So it works similarly to the whole life, but it is just a little more flexible. And the joint whole life. So obviously we see this a lot in the buy-sell part of the business owner. And then issue ages, again, are the same. The face amounts are the same as well. We use a combination for a combination class for our underwriting. So with the age and the health and all of that. So we'll do a combination of those. Guaranteed renewable to age 121. Again, this one's an excellent cash value builder, and it's great for business owners for that buy-sell agreement. It has a lot of good features on it where if the partners would break up at some point, they are able to just continue on with their own separate participating whole life policies without having to reapply. So that's a nice feature. It is a first to die policy, so keep that in mind. But honestly, we typically always see these used with buy-sell agreements. So, and then it works very similarly to the participating whole life. So this is a great product to use for those business owners as well. So now we have a case study, like I said, we're going to go through, and this one actually uses the term product. So I think you'll find this one pretty interesting. The term is, I would say, the easiest to sell, just because it is the most affordable and it really covers just their basic needs there with the business loan. If they really understand the whole retirement supplement part or the buy-sell agreement part, then those you can really take the time and go into those permanent products with them. But the term is going to be that easiest quick hit to get those small business owners, especially the coverage that they need. So we're going to use the example of Carrie and Sarah. So they're in their mid-30s, so pretty young business owners, and it's just them two working at the floral shop that they own in North Carolina. So again, they're 50-50 owners. And the situation here is they're looking to build a new brick and mortar location. So they were working out of Sarah's house at first, but now they're looking to move location. So of course they need a business loan in order to do that. So they take out a $150,000 business loan for a new storefront. They are equal investors, and they're wanting to really make sure that in the event of one of them passing away, that the other one can take that money and use it towards the business loan and make sure that that business is able to continue even with just one owner. That's what we're looking to cover here. Pretty typical situation, especially this is a more typical situation, I would say, with small business owners, so 5 and under employees. So the solution here, each co-owner purchases a $250,000 30-year term life insurance. So our term periods go 10, 15, 20, and 30. So they select the longest one. And since they are under the $500,000 limit for the accelerated underwriting, they do qualify for no medical exams. So it's a quick application process, quick issue, and they don't have to spend the time going to get those parameds done. So the payout here would cover the business loan and then allow the remaining partner to buy out the business. So again, their business loan was $150,000 and they just took it out. So most likely their balance is going to be near that point. So they want to be able to pay off that business loan, and then one or the other would be able to buy out the remainder of the business from the partner that passed away. The agent also encouraged them to add on that optional critical illness benefit rider for a $100,000 lump sum payment for each person. So if one or the other would come down with one of our critical illnesses that's covered, so cancer, heart attack, stroke, or something in the other category, we pay them a $100,000 lump sum payment. it would not come out of their $250,000 death benefit for the life insurance portion, but they'd be able to use that $100,000 for absolutely anything. So it could really help if they needed to hire some more help while the other one is healing or undergoing treatment or something. They could use it to pay that extra person. They could use it to keep making loan payments. They can literally use it for whatever. So they found that very useful, a pretty cool feature to add on there. So here is the pricing, just to give you a little idea of what the term pricing looks like. So for Carrie's, which she's the younger one by a year in this situation, her base policy is only going to be $33.50 a month. And with the critical illness benefit added on, again, that's $100,000 of coverage, we're looking at a total of $84.83 a month. And she was given a standard non-tobacco rating. And we do have preferred and preferred plus above that. And then we can go down into table ratings if we need to. So for Sarah, we're only looking at just about a $6 increase. She got the same standard non-tobacco rating. She's just a year older. So we're looking at $91.18 a month. And again, that coverage is going to cover them. It's going to cover their business loan. It's going to allow them to continue the business. And then the critical illness rider is going to allow them to continue the business as well if one of them is out of commission for a little while dealing with one of those critical illnesses. So they find it totally worth it. So that's a really good situation that you're going to see a lot, especially in those small businesses of 5 or less. They just want they want to make sure that they're covered on all their major bases. They're not super concerned with that cash value or retirement yet, maybe because they're younger. But they can convert after that 30-year term period is up. They can convert it to a permanent policy and kind of take it from there. So keep that in mind. They can convert at the end of that term period into a permanent policy once they're kind of ready to supplement that retirement or whatnot. So that's kind of it for the product portion of it. Again, type in the chat box if you do have any questions. Just want to go over real quick, just working with Assurity and kind of how that process flow works. So case design, you can work with your ArtJet or life specialist, give them a call, shoot them an email if you need a quote done, if you need help with the case design, you have a business owner and you're kind of just wanting to know what would work best for them, and they'll help you pitch that. The application process. So we have e-apps available for all products, as well as paper apps and a tele app available for that term. So keep that in mind. Tons of different options for the application. Try to make it as easy for you as we can. The e-app for the term product, I did mention that accelerated underwriting process. If they do qualify for that accelerated underwriting, there is a chance for them to receive, they will receive an instant decision at the end of that e-application. But if everything looks good, they're a healthy individual, no issues, in no need of underwriting, they will go straight to issue after that e-application. It'll say, congrats, we're going to issue it at this rate, whatnot. We're sending it straight to issue, doesn't even need to see underwriting. So that's a really cool feature with the term product. And then the underwriting. So I mentioned the accelerated underwriting, and then we do have non-med limits built into the permanent policies as well. So make sure you jump into AssureLink and go to the product center, and you can kind of check on what those are, given whatever permanent product that you're looking at. So that's a little bit about the process here. Any questions? I'm looking at the chat. I don't see any yet, but Sean, go ahead and let me know if you had any come in on your end.
Yep, I've got a handful coming in. First things first, I think if this one came in when we were talking about the term, would it have a medical exam? Do you want to touch on the accelerated underwriting just a little bit?
Yeah, yep. So if you keep it under those benefit amounts that I mentioned, so the $500,000 and under for the 18 to age 50, and then $350 for those older ages, they're not going to need a medical exam. They might need a phone interview at the most, but they can probably make it through without one, but just beware, they might have to do a phone interview. But If you keep it generally under that 500,000, 350,000 for the older ages, they're not going to need a medical exam for that term product.
Perfect. Next question, do you know what the current interest rates are, I guess the dividend rates on the whole life?
I do not know them off the top of my head. We do release an interest bulletin every month, and it releases all of that information on just a nice little one-pager. So I can send it to you, Sean, afterwards, and you can disperse it to everyone, or if you go into SureLink, and then just go to like any of the whole life product or the universal life, the interest rate bulletin is one of the links there. And we update that every month. So, yep.
And then I think the last question we've got here, is Assurity considering, or would you guys consider working with indexed universal plans in the future? And I think since I know what your answer is going to be, why
not? We actually talked about this the other day in a product meeting with our head product manager. He did not go into any detail, but he just made it very clear that we will most likely never do one. So I don't know what the reason is for that, but we don't have any plans to get an IUL, unfortunately.
Fair enough.
Yep.
And I think one more question came in specifically for that critical illness rider.
Yeah.
Once a payout happens, once you have hit one of those triggers, would you continue to pay for that rider?
Yes. So I mentioned that there are 3 categories. So we have a 3-category approach where we'll pay that lump sum benefit out in each category, once in each category before they close. So if someone is diagnosed with cancer, we'll pay out that lump sum benefit, close that category, and then they still have the heart attack and the other open. So if either of those things occur, we'll pay them out again before we close the rider completely. If they happen to satisfy all 3 categories, we will close the rider and you won't have to pay for it anymore. But yeah, it is a 3-category approach, so it's not just a one and done and we close it and you quit paying for it.
Perfect. Awesome. Well, I think that was all the questions. There were a couple that came in asking for a copy of the presentation. I will get everybody a copy of the webinar afterwards. Don't worry about that.
Great.
Other than that, we're going to have another presentation next week. We're going to go through college planning and policy gifting for juveniles, same time. So make sure you register and save your spot for that. Still not seeing any more questions, so feel free to give us a call if I missed anything or you would like a copy of this. But thank you again, Morgan. Thank you, everyone, for coming up and checking it out this morning. And I'll see you all next week. Thank you.
Yes, thank you very much.